Hey folks, and welcome to the Pipnotic Symposium for the 16th of March 2020. Wow, what a roller coaster these past days. Here in Bali, all the schools on the island have been closed down. They're threatening to shut down the airports so no one can come to or leave Bali. Neighboring countries, many of them, have closed their borders and their airports, which makes expats like myself and my family and many of the other people, expats who live here, it kind of puts us in a bit of a bind because we have nowhere to go for visa runs. I don't know, maybe Greenland or something like that, but it's becomes really problematic, I think, for a lot of people who are living kind of an expat life here and are forced to leave the country on a regular basis in order to renew visas. So currently, that's giving us a bit of stick. If we have a quick look at the headlines, let's run this script here, see what happens. Midwest stocks dropped despite 47 billion of central bank aid. Coronavirus pandemic puts Fed on rapid route to zero. And this morning we got the cut down to zero. Poland needs fiscal boost over rate cut, central banker says. How to stop the recession from happening right now. Negative, negative, negative. China home price growth stalls, sales plunge amid virus shutdown. Morgan Stanley says markets are bottoming to sell US dollar. Yeah, so there you can see, everything is negative across the board. In a situation like that, you have to be really careful being a contrarian trader because you have to follow the major flows. And currently, people are liquidating positions. They're shorting major companies, major airline companies in the US, in Europe, in Asia. They're losing a lot of money because people aren't flying. And so there are massive companies all over the world are suffering massive losses as a result of all these imposed restrictions. Okay, so you have to keep this in mind when you're looking to act in the market. So fundamentally, everything is bearish. So before we go to the charts, I think we can safely say that all of the indexes, the European indices, the American, the Asian, they're all going to be negative. Yeah, it's a real a bit of a shit show for the time being, but we'll see what happens. Kind of get concerned because you wonder, is there something we're not being told? Because they're making a big deal of this. Obviously, I understand that hospitals can be overwhelmed by a massive influx of sick people, and of course, countries like welfare states in, let's say, in Scandinavia, that would be tough to handle a massive increase in sick people visiting the hospital, which is why, of course, welfare states are going to be shutting down their borders, shutting down schools. Yeah, I don't know. It's a really difficult time. I think we're slowly moving into, and in the U.S., the people who have limited money, so low-income families, they're still forced to take public transportation. They're still forced to enter the public domain in order to get to work. Because if they're not working, they're not getting paid, and that's a problem because when you put yourself in a public space like this, the experts are telling us not to do this, and so you're also putting yourself at risk. And if these low-income families get sick, who pays their bill? And so it's a real stink. And so the Fed has this great idea that lowering interest rates is going to increase loaning and perhaps create a bit of activity, but that's a bunch of rubbish. Low-income families, they're not going to loan money. They can't afford to loan money. The only people who are going to make money in a situation like that are the haves. They're going to be loaning money so they can make more money, and so it's a real a tricky situation. So, judging by the headlines, things are looking really bleak. Okay, so depending how long this goes on for, if we move a month, let's say the lockdown continues, and we move even a few weeks or a month or 2 or 3 months into the future, companies, big companies, will be going bust, and that will be catastrophic for the world economy. And it's kind of like a house of cards. You have one company that goes bust, and that pulls down another company. And I think one of the main issues that's in my mind is if you think about who owns corporate debt, many places in the world, well, it's the pension funds. I have some funds locked up. They invest in corporations because they expect corporation and economic data to expand. They expect these companies to continue to produce good earnings. But in a recession, that doesn't happen. Then we experience extreme contraction. So all these big pension funds who are heavily invested in long markets and bull markets are going to lose, I mean, staggering amounts of money. And that's quite worrying if you have a mother or a father or any other relative or friend who is looking to retire. I mean, that makes retiring really difficult. And so I think we're going to see some pension fund issues, pension fund cracks here within the not too distant future as a result of this. There's simply not enough money in the tills of the governments to cover these losses that are just around the corner. So we have to be very, very careful. I was worried about this happening, and so a lot of my pension in Denmark, I got paid out. So I got it paid out prematurely. I had to pay a lot of money to do that, but I would rather pay 50% in tax and get half of what I was going to get than get nothing at all once the pension funds go bust. So that was a strategy back then, but I still have a little bit in there. And so it's exciting times, I think. A little bit too exciting, I think, as well. So if we have a look at the price charts, let's have a look at the indices first of all. Where do we have these? Here, let's look at the Australian index. I mean, look at that. Negative. This is the daily chart. I mean, negative. The French, German, tearing through tearing through weekly demand. Hong Kong selling off. Oh my goodness. Japanese is selling off. The FTSE negative. The Nasdaq, I mean, we are plummeting. We have the US 30 selling off. We have the S&P. Yeah, you can see, I mean, there's absolutely no reason to buy. And a lot of people are looking to buy at very discounted prices at the time being, but I would say that's a little bit too early. I'll certainly be waiting. I'd be looking to sell for the time being. So in a situation like this, as currency traders, what do we do in a situation like this? In a situation like this, I think it's good to focus on currency strength. So let me just pull up the currency strength software here. Strength, we need the GFX. Here we are. Okay, let's plop that on there. That's good enough. So let it download some data. Let's change around a bit. Whoa. Zoom out. Okay, we're on the we have the weekly chart. I mean, who's getting beaten? Let's have a look. So we have Swiss franc, we have Japanese yen, and now we're beginning to see the euro starting to take a hammering. Having strength. We have the Australian dollar, the Kiwi dollar, the Canadian dollar, the Singaporean dollar. They're starting to move to the low side here. So what do you do in a situation like that? Well, in a situation like that, you want to take these currencies and you want to pair them. Okay, so let's just do that. Okay, so buying, we're going to be buying Swiss franc. I'm going to be buying Japanese yen. I'm going to be buying the euro. And selling, we're going to be selling the Australian dollar, the Canadian dollar, and the Kiwi. So if we create pairs out of those, we have the Aussie franc, sell. We have the Aussie franc. We have the Aussie yen. We have the Euro Aussie. Buy. The Euro Aussie. Okay, Canadian dollar, Swiss franc. We want to sell the Canadian dollar, Swiss franc. We want to sell the Canadian dollar, Japanese yen. Oops, we want to sell the Canadian dollar, euro. So we want to buy the euro Canadian dollar. Go to the Kiwi. We want to sell the Kiwi, Swiss franc. Want to sell the Kiwi yen. We want to sell, or rather buy, the euro Kiwi. Okay, that's what we have. So let's have a look at these pairs. Let's start off with the Aussie Swiss franc. So go to the Aussie Swiss franc. Here, this should be moving down in a hurry, and you can see it is very aggressive. This is the weekly chart. Yes, and if you look now, looking at supply, where do we have supply? We have supply just here. Okay, so this would be an interesting area to start to sell. Remember, we are selling in line with the fundamentals. The fundamentals are very powerful at the moment. They're very strong, they're very aggressive, they're very volatile, and we certainly want to be selling in line with what we can see here. And this is a gradual but very powerful progression in the strength of these currencies. And so this would be an interesting area to sell. If we refine that, we have the beginning of the sell zone at the high of the departure. We have a gap. Let's just do something like that. So we have something that looks a little bit like this. Okay, something like that right here. Okay, let's allow the robot to trade. Let's put a trade on in there for us. It likes that one. Okay, let's have a look now at the Aussie Japanese Yen. The Aussie Japanese Yen, we have the same thing going on. There's not a lot of clarity on this chart. We just have gaps and mess, but we do have this. We do have this here. Okay, so what we could do is we could say take that trade and move it down to here. Okay, I like that one. We have the Canadian dollar Swiss franc, which we have here. This is also looking incredibly bearish. If we have a look here, you can see that we have gaps. I like this one a little bit better, so we could do something like this. Move this up to. Let me get that box away here. We could move it up to here. Here we had tested. Price came up, slingshot, and then we left. So I'm thinking that's a little bit more interesting. The Kiwi Swiss franc. Yeah, there's nothing really interesting here on this time frame. Yeah, you can only see something up here. So if we, yeah, I mean for this, I think this is the interesting area, just here. Something here. This is just a nice departure. We had this low, price bounced roughly at that area, and then we managed to cut away. The slingshot was pulled back to here, and then we left. So this is an interesting area here. Okay, we have Kiwi Japanese Yen. Here probably looks pretty similar. Yeah, and we have that right there. Just plop the robot on. Yeah, so that's what we've got there. Looking very, very bearish. Incredibly bearish. Let's go to the monthly chart. Yeah, it looks pretty bleak. Very bleak. But I like this area here. Who knows if we're even going to get it back up there. Okay, we look to buy the Euro, the Aussie. The Euro Aussie. Where's the Euro Aussie? The Euro Aussie we have here. Yeah, we've got an interesting area here, right there. I'll leave that like that for the time being. We have the Euro CAD. The Euro CAD is here. Yeah, this is kind of a mess, isn't it? Yeah, we had this area here, this area of demand, and price poked into it, and then we went north, and so price has moved above this high, so we're certainly keen to look to buy. This is a little bit messy here. So we have this here. This is like where the gap originated from. You can see there's a bit of clarity here. I don't know. I wouldn't touch that one. I'll wait. Pass on that one. There's no clarity. Let's have a look at the Euro Kiwi. Euro Kiwi. Yeah, this looks a little bit more interesting. Let's have a look on the weekly. Yeah, this is just a really nice push away. Let's go back here. Oh wow, so these are 0.25% risk trades. That's fine, so we can open those up. So it's 0.75% risk. Okay, so now we have those. Okay, we've got those. Good. What I've done in a situation like this, focusing on currency strength, a strategy that I've been employing for a very long time is at extreme deviations from the mean, so the white line being the mean, now would be a good time to sell the currencies at the top and to buy the currencies at the bottom. But in a situation like recession mode, which we're kind of currently entering, it can be a little bit dangerous because this can continue to go on. You can see here that, this has been, let's go to the Aussie Swiss franc. So we got this signal, we started to get these signals kind of already here. And so had we bought, I think we would have lost our shirt. Okay, so it's really important to remember kind of the environment that we're currently in. And currently the environment is very negative. So in a situation like that, it's more interesting to have a slightly different strategy. And the different strategy would be, as an example, selling weakness and buying strength in expectation that it's going to continue moving lower. We're seeing this all across the charts. I was selling the Australian dollar last week, and I started selling here, and I got out just above here. It was a remarkable trade, and I got out. But at the same time, these kind of trades you can hold for slightly longer because the likelihood of the move lower continuing is pretty high because you're seeing this. Okay. You're seeing this. The Australian economy is taking an enormous hit, and last week we had some headlines about Australia, and they were really struggling. Here we have New Zealand stocks fall into bear market on the border restrictions. Okay, and so all this closing of borders, of airports, these quarantine restrictions like they've just imposed in Singapore, where we normally go for visa runs, that's done. So you have to be there for 14 days in quarantine. You're no longer to go in and out for a day. And that makes things really complicated. And it makes things very bearish. It makes the economic outlook very negative because people aren't going to stick around. They're no longer going to go to these places because they can't. They don't want to be in quarantine for 2 weeks. Or maybe they're coming from a country that's been blacklisted and is no longer allowed to visit. And New Zealand's taking a hit on this now. And it's just a matter of time before many of the other countries in the region experience similar situations. We also have this American, European inbound, outbound flight restrictions imposed by Donald Trump. This is also very negative for both Europe and the United States, and we're going to experience a lot of the airliners, US Airways, many of the others that are going to start to take a hit on this. Lufthansa, many of the big European ones, they're going to start to experience tremendous losses as a result, because many of the departures from Europe also go to America, and that's a big part of their business, and so they're no longer going to see revenues generated from these flights, and that's massive, absolutely massive. Okay, good. So in a situation like this, it's very important to focus on the fundamentals. Looking at supply and demand is one thing, and as you can see, we've seen a couple of examples where price bounced nicely at these areas, but longer term, and you really want to be aware of what's going on. Okay, good. So we have a couple of ideas. Keep your eyes on these and see how they pan out, and I think I'll leave it at that. I'll keep it short this time, but have a good day, wash your hands, and I'll see you in the next video.